Good afternoon, distinguished members of the press, MPC members, ladies and gentlemen. I welcome you to the communique number 136 of the Monetary Policy Committee meeting that held between yesterday and this afternoon. Monetary Policy Committee met on the 24th and the 25th of May 2021 as the global economy gradually emerges from the 6-quarter-long COVID-19 pandemic with lingering uncertainties. The recovery is on account of widespread vaccinations, easing of restrictions, reopening of economies, and gradual return to international travels. India and Brazil, however, continue to battle high levels of infections and fatalities resulting from mutating strains of the virus. In the domestic environment, the economy is expected to remain on current trajectory of recovery in 2021, mirroring the cautious optimistic trend in global output recovery. The committee reviewed the developments in the global and domestic economic and financial environments in the second quarter of 2021 and the outlook for the rest of the year. 10 members of the MPC were present at this meeting. The global economic development. The committee noted that while the vaccination against COVID-19 is drastically reducing fatalities across several economies, the recovery remains uneven and is tilted against developing economies compared with developed economies with better access to vaccines. Other emerging market economies with strong manufacturing capabilities, like China, are also on the verge of full recovery. Accordingly, the International Monetary Fund, the IMF, revised global output growth for 2021 to 6%. This represents an upward revision of 0.5 percentage points compared with the earlier projection of 5.5%. The projection is, however, dependent on the efficient deployment of COVID-19 vaccines and sustained policy support across economies to strengthen the recovery of global output growth. Prices, however, are expected to rise globally due to the massive monetary and fiscal injections in several countries to mitigate the impact of the pandemic in several countries. The MPC noted the gradual recovery of prices, especially amongst some developed advanced economies, as inflation continued a steady movement towards the long-run objective of their central banks. It is expected that inflation may breach the long-term objective of several central banks in the medium term as economic activities continue to recover as more people are vaccinated. In several emerging market and developing economies, however, inflation has remained relatively high, with some economies confronted with significantly higher inflationary pressures than others because of legacy structural issues, capital flow reversals, and unabating exchange rate pressures. The prevailing conditions in the global financial markets remained relatively stable as central banks sustain monetary accommodation. There are, however, growing indications that monetary policy normalization may commence amongst some key central banks by the fourth quarter of 2021. The timing and pace of this normalization must, however, be carefully managed to mitigate the risk of a financial crisis post-pandemic. Domestic development. Available output data from the National Bureau of Statistics, the NBS, showed that real gross domestic product, the GDP, grew by 0.51% during the first quarter of 2021 compared with 0.11 and minus 3.62% during the fourth quarter and third quarter of 2020 respectively. Real GDP was driven largely by the non-oil sector, which grew by 0.79% during the first quarter of 2021, compared with 1.69 and minus 2.51% during the fourth quarter of 2020 and third quarter 2020 respectively. The major drivers of the non-oil GDP were agriculture and industry, with sectoral growth rates of 2.28 and 3.05% respectively during the first quarter of 2021. Whereas agric declined by 1.14 percent points from 3.42% during the fourth quarter of 2020. Industry, supported by growth in manufacturing and construction, grew by 3.3 percentage points from minus 0.25% during the fourth quarter of 2020. The sectoral contribution of services to GDP, however, contracted from 1.31% during the fourth quarter of 2020 to minus 0.39% during the first quarter of 2021. The oil sector contracted further by minus 2.21% during the first quarter of 2021 from minus 19.76 and minus 13.89% recorded during the fourth quarter of 2020 and third quarter of 2020 respectively. The weak performance in the oil sector is largely attributable to the decline in production in compliance with the OPEC Plus production cut agreement. The committee noted the marginal growth in the Manufacturing Purchasing Managers Index to 49.0 index points in April 2021 from 48.8 index points in March 2021. This increase is a lead indicator of recovery of output growth following the easing of restrictions to curtail the spread of the pandemic. The non-manufacturing PMI, however, declined marginally to 47.3 index points in April 2021 compared with 47.9 index points in March 2021. The employment level component of the manufacturing and non-manufacturing PMIs rose moderately in April 2021 to 46.5 and 48.2 index points from 45.9 and 47.7 index points in March respectively. Committee noted the moderate decline in headline inflation year on year to 18.12% in April 2021 from 18.17% in March 2021, following 19 consecutive months of continuous rise. The decrease was driven by a marginal slowdown in food inflation to 22.72% in April 2021 from 22.95% in the previous month. This was partly attributed to the bank's massive interventions in various sectors of the economy to stimulate aggregate demand and boost production, particularly for small and medium enterprises. The MPC, however, noted that headline inflation remained well above the ceiling of the bank's 6 to 9% inflation target corridor as a result of a combination of factors, including the heightened security tensions in the country and deteriorating public infrastructure. As a result, the bank expressed its support to the federal government's commitment to tackle insecurity, as this will improve the business environment and encourage economic activities to rein in inflation. MPC was also mindful of the impact of exchange rate pressures resulting from capital flow reversals associated with COVID-19 shock as investors sought for safe havens. It, however, applauded extant measures by the bank in ensuring both liquidity and stability in the foreign exchange market, as well as moderating the exchange rate pass-through to inflation. On the performance of the monetary aggregate, committee noted that broad money supply, M3, grew by 1.15% in April 2021 compared with 0.04% in March 2021. This development was largely driven by growth in the net domestic assets NDA, while net foreign assets NFA contracted. The growth in net domestic assets reflects the growth in aggregate credit supported by the ongoing broad-based monetary and fiscal stimulus. Accordingly, gross banking sector credit at the end of March 2021 stood at 23.53 trillion compared to 22.86 trillion at the end of December 2020. This represents an increase of 0.85 trillion year to date, of which commercial and merchant banks disbursed 0.66 trillion, microfinance 0.13 trillion, development finance intervention 0.05 trillion, and primarily mortgage banks and finance companies 0.01 trillion naira. The liquidity condition in the banking system in the review period was determined by several factors, including fiscal disbursements and withdrawals by states and local governments, periodic CRR debits, foreign exchange interventions, open market operations, and maturing CBN bills, the net effect of which imposed liquidity constraints on the banking system. Accordingly, the monthly weighted average interbank call and open buyback rate (OBB) rates rose to 15.26% and 14.58% in April 2021 from 1.8 and 1.5 in March 2021 respectively. The committee noted the moderate decline in the equities market year to date as the all-share index decreased by 1.97% to 38,287.58 on May 24, 2021 from 49,045.13 on March 30, 2021. Similarly, market capitalization decreased by 4.3% to 19.96 trillion on May 24, 2021 from 20.82 trillion in February 26, 2021. The MPC noted that the capital adequacy ratio and the liquidity ratios both remain above their prudential limits at 15.8 and 38.9% respectively. The non-performing loans ratio (NPLs) at 5.89% in April 2021 showed progressive improvement compared with 6.6% in April 2020. The MPC, however, urged the bank to sustain its tight prudential regime to further reduce the level of non-performing loans in the industry. The committee noted the external reserves declined marginally to 34.17 billion as at May 21, 2021 from $34.29 billion as at the end of April 2021. This reflects sales to the foreign exchange market and third-party payments. Our outlook. The optimism for medium-term macroeconomic recovery in both the global and domestic economies is slow but steadily growing, even as some level of uncertainties are still present. This is due to the unabating COVID-19 pandemic in some countries such as India and Brazil, caused by mutation of the virus into more fatal strains. In addition, the recovery is uneven and seems to be more likely to countries that have high vaccination rate than those less vaccinated or that are still suffering from the effects of the more fatal strains of COVID-19 disease. As conditions improve, however, central banks of the advanced economies are beginning to signal the possible shift in monetary conditions when normalization of monetary policy commences by the fourth quarter of 2021. Available data and forecasts for key macroeconomic variables for the Nigerian economy suggest that output growth will continue to recover for the rest of 2021. This is premised on the continued support for agriculture to improve food supply, rein in inflation, and improve employment. Others include efforts of both the monetary and fiscal authorities to improve infrastructure in the country. The forecast for the Nigerian economy for 2021 is thus strong domestic push to support recovery, particularly to ensure an end to insecurity in the country. Consequently, as the productive capacity of the economy improves and the supply chain fully restored, we expect inflationary pressure to begin to ease as the supply of goods and services offset demand. The committee's consideration. At this meeting, the MPC recognized that the twin problems confronting the Nigerian economy and that must be addressed relates to stagflation caused by rising inflation with output, in this case GDP, contracting at the same time. Committee further recognized that the strategy put in place to rein in inflation through the use of series of administrative measures by the bank to control money supply through liquidity mop-up in the banking system had started to yield results. It also recognized that measures put in place to stimulate output growth through the use of its intervention facilities to inject liquidity into employment-generating and output-stimulating initiatives like the Anchor Borrowers Program, Targeted Credit Facility, and AXMI's Agric Small and Medium Enterprise Equity Investment Scheme had started to yield results. In the view of the MPC, although the economy had successfully exited the recession, the recovery was very, very fragile, given that the GDP of 0.151% was still far below population growth rate. Committee therefore was of the view that there is a strong need for the monetary authorities to consolidate on all administrative measures currently being taken, not only to rein in inflation, but also on the action so far taken to spur output growth. According to the committee, such measures include boosting consumption and investments, as well as diversifying the base of the Nigerian economy through FX or forex restrictions for the importation of goods and food products that can be produced in Nigeria. It also urged the bank to continue to put in place measures that will boost export earnings in Nigeria. On the consumption and investment side, MPC noted that although the intervention facilities to Anchor Borrowers Program currently at 631.4 billion to 3.1 million smallholder farmers cultivating 3.8 million hectares of land, for the AXMIs, about 111.7 billion to 29,026 beneficiaries, for households under the targeted credit facilities, about 253.4 billion naira to 548,345 beneficiaries, comprised of 470,969 households and 77,376 SMEs, have helped in boosting output. Management should therefore aggressively increase its intervention in these sectors, including agricultural processing and manufacturing. Under the National Youth Investment Fund, 2.1 billion naira has been disbursed to 7,057 beneficiaries, of which 4,411 are individuals and 2,646 are SMEs. Under the Creative Industry Financing Initiative, the CBN has disbursed 3.19 billion naira and to disburse to 341 beneficiaries across movie production, movie distribution, music and the software development sectors. Under the 1 trillion naira real sector intervention, 856.3 billion has been disbursed to 233 real sector projects, of which 77 are in light manufacturing, 36 in agro-based industry, 30 in services, and 11 in mining. Under the 100 billion naira Healthcare Support Intervention Fund, 97.4 billion naira has been disbursed to 91 healthcare projects, out of which 26 are pharmaceuticals, 65 hospital services. Also, the sum of 232.5 million naira has been disbursed to 5 beneficiaries under the CBN's healthcare grant for research on COVID-19 and Lassa fever. Under the National Mass Metering Program, the CBN has disbursed 35.9 billion naira to 9 discos for the acquisition of 656,752 electricity meters. And under the National Nigerian Electricity Stabilization Facility, 2 NEMS, 93.8 billion naira has also been disbursed to 11 distribution companies. The committee members applauded government's efforts in combating the headwinds imposed by the pandemic and urged that going forward, government should avoid an entire nationwide lockdown like was experienced in 2020, as this will reverse the wholesome gains jointly achieved between the government and the central bank since the outbreak of this pandemic. The MPC carefully assessed the options on direction of policy in the short to medium term. It reappraised current measures by the government to purchase COVID-19 vaccines and the general preparedness of relevant public health agencies to guard against the spread of the mutating strains of the virus. To this end, the committee noted the appropriate steps taken by the government to ensure that up to 70% of the populace get vaccinated to drastically drive down the infection rate in the country and hence sustain economic activities. Committee noted the persisting security crisis, especially in major food-producing regions of the country, and the severe toll on food supply and prices. It noted that inflation had moderated marginally due to the unrelenting efforts of the bank in supporting agriculture to boost food supply. The committee thus reiterated its call to the government to intensify various efforts towards addressing the security situation in the country to ease supply bottlenecks and bring down food prices. The MPC further noted government's commitment towards investing in public infrastructure despite constrained fiscal position and urged a continued focus on this objective while exploring the option of effective partnership with the private sector as improved road networks, telecommunications and power supply will greatly and positively impact the supply chain and moderate price developments in the country. It further noted the need for collaboration with Nigeria's huge diaspora through the issue of diaspora bonds targeted at specific infrastructure projects. Even as the committee noted that the public debt stock was currently high, it was of the view that project-specific diaspora bonds issues could conveniently pay itself back without imposing a burden on government finances. It noted the complementary role this would play in boosting foreign exchange supply, a creation to reserves, and easing of the current exchange rate pressure. Committee noted that the equities market remained in a comfortable place, an indication of investors' confidence in the stability of the Nigerian economy in the medium term. The MPC thus urged the bank to maintain its collaboration with the fiscal authority to improve investment climate towards attracting sustainable foreign direct investment. With the developments in the banking system, committee applauded the efforts of management in ensuring a reasonably low level and steadily reducing rate of non-performing loans, even as aggregate credit continued to expand through this crisis period. While non-performing loans remain marginally above the bank's regulatory threshold, members noted that it was at a reasonable level considering the current state of macroeconomic imbalances occasioned by the pandemic. Committee's decision. The recent developments in domestic economy presented two broad options to the NPC, which were to either aggressively address the high inflationary pressure or continue to pursue measures aimed at supporting this recovery. Whereas the committee remained overwhelmingly committed to supporting the efforts of the federal government in ensuring full restoration of the productive capacity of the Nigerian economy, members remained focused towards achieving price stability in the short to medium term. The MPC noted that economic growth could be hampered in an environment of unstable prices. To this end, the choice therefore was between loosening the stance of policy to ease credit further or tighten to moderate price development or maintain a hold stance in order to allow previous policy measures to continue to permeate the economy while observing global and domestic developments. Committee noted that an expansionary stance of policy could transmit to reduced pricing of the loan portfolios of deposit money banks and result therefore in cheaper credit to the real sector of the economy. On the converse, this expected transmission may be constrained by security challenges and infrastructural deficits. On the other hand, while a contractionary stance will only address the monetary component of price development, supply-side constraints such as the security crisis and infrastructural deficits can only be addressed by policies outside the purview of the central bank. A tight stance in the view of members of the MPC will also hamper the bank's objectives of providing low-cost credit to households, to micro, small, and medium enterprises, to the agricultural and other output growth and employment stimulating sectors of the Nigerian economy. Based on the above considerations, the MPC made the decision to hold all policy parameters constant. Committee thus decided by a unanimous vote to retain the monetary policy rate at 11.5%. In summary, MPC voted as follows. 1. Retain MPR at 11.5%. 2. Retain asymmetric corridor at plus 100 and minus 700 basis points around the MPR. 3. Retain the CRR at 27.5. And 4. Retain liquidity ratio at 30%. Thank you most sincerely for your attention.
Thank you, Doctor. Central Bank of Nigeria. That is the communique number 136 of the meeting of the Monetary Policy Committee of the Central Bank of Nigeria, delivered by the Chairman of the NBC and the Governor of the CBN, Mr. Godwin Emefiele, CON. Now,
thank you.
We'll take some questions. We'll take some questions, and as usual, a number of the respondents send in questions from their bases. As we, due to COVID-19, we're going to be able to accommodate all of them. Now, for those ones here, you tell us your name, the media house you represent, and your question, but please keep it simple. Thank you.
Thank you very much, sir. Good afternoon, Governor and all protocols observed. I am Nancy Naji, the Executive Producer of Moneyline at Governor, you alluded to the positive, though fragile movement we saw quarter-on-quarter GDP from 0.11% in Q4 to 0.51% in Q1. The surprise to many that had forecast a negative GDP in 2021. What are your views, really, on this Q1 GDP data? Because we saw that some sectors were still lagging. The second question is, what actions will you undertake to ensure that these indices remain positive? Because it's fragile, so there is, if we are not really careful, we may actually also fall into a negative position. So what is the MPC, or what did you discuss at the meeting to make that these indices remain positive going forward, since you are pro-growth? The third question is the rate of inflation, which you've talked about, in fact, stagflation, and all through your communique, you're talking about insecurity. So now I really want to know what your wholesome views are concerning insecurity in the country. Thank you, Governor.
Good afternoon, Governor, and all criticals so duly observed. My name is Leah Katimba-Wachinde from the Nigerian Television Authority. Since we're still talking pro-growth, last year, February to be precise, Governor, you announced some numbers of stimulus for small businesses and households impacted by COVID-19, and also granted a form of forbearance. Now, this year, you also announced a 5% rate on CBN interventions to continue all through March 2022. But then, your pro-growth and small businesses mostly are complaining that loans given to them through the banks, they are demanding much higher lending rates. Can you speak to us on some directives given to the banks on this issue? And also last week, the global economy witnessed a lot of ripples from the cryptocurrency market, and you in particular announced some policy decisions some weeks back. So people praised the CBN for announcing those decisions, and of course dealers of the banks, using the banks and payment infrastructure to conduct their businesses. You came up with some issues that have got a lot of people talking. Can you confirm if your stand has actually protected the market? Thank you.
Good afternoon, Governor and your team. My name is Chinabara Joseph. I work for Alliance. Still talking about pro-growth, Governor. I'm sure you feel very elated knowing that the GDP growth for the first quarter of 2021, agriculture was a part of it. So what would you be doing differently really to drive some of the bank's intervention, and how do you hope to convince people who know that these interventions are not free money, they are loans? How would you be convincing them to pay back or come and access these loans? And secondly, Governor, it's been observed that the official exchange rate has not been updated daily on the bank's website, and we know that some people have linked this to pressure on forex. You alluded to it when you were speaking, but it's certainly a matter of concern right now. What is the Apex Bank's position on the exchange rate? That's one. And secondly, can we speak to availability of forex?
Good afternoon, Mr. Governor. All protocols be observed. My name is Raham Asalidu. I work for Radio Nigeria. Still talking about loans, you were quoted in some media reports as restating the bank's resolve to recover the loans extended to state governments as budget support facilities. Please, I'd like to know if you have commenced the process, or if the bank has decided to stop, pedal a bit and give them some time. Thank you.
Thank you.
Good afternoon, Mr. Governor. My name is James Major. I work for this day. My question centers around the CBN's Naira for dollar policy. This policy ought to have come to an end by 8th of May, but it has now been elongated indefinitely. Could you assess it and tell us what impact it has had? Thank you, sir.
Okay, Governor, some of these questions, like I said, we are sent. The first person here is Collins West, of the Nation newspaper. And his question is, following recent development in the cryptocurrency space, do you feel somewhat professionally vindicated, given that the narrative had been that the CBN was anti-Nigerian youths? And he also sent this other question. We are in Ekiti State recently, where you faulted claims of imbalance in the bank's intervention schemes. You may want to throw more light on that, especially given the issues raised from the South-South geopolitical zone. The next question, Governor, is coming from Abdul Wahab Isa of the New Telegraph. And he says, the MPRs in April released the inflation figures of 18.12%, showing a first decline in almost 2 years. This was followed by an output figure of 0.51%. Are you satisfied with the performance given the level of intervention which the bank has put in place? And finally, sir, from Sunday Michael of Daily Trust newspaper. Mr. Godwin, the CBN is adopting various measures that have helped to stimulate output, such as credit to SMEs through ADP, Targeted Credit Facility, and the actions. Now that the CBN is attaining the threshold, what does CBN intend to do? Thank you, sir.
Well, thank you very much. Well, the first question by AIT Nancy talked about the fact that, well, that we're happy that we've exited recession. Inflation sort of has begun to, it has hit its plateau, and we are beginning to see a situation where inflation will begin to trend downwards. And at the same time that GDP is growing, though remains very fragile, but that some people still express surprise about it, and then asking for our views by saying what are our views and what are we going to continue to do to ensure that these indices remain strong going forward. I think it's important to say this, that for us at the Central Bank of Nigeria, we are not surprised. We are not surprised because, if you recall, Nigeria is just one country that is peculiar for what is, I call a situation that is out of the ordinary. Out of the ordinary because you find Nigeria amongst several countries being one country that is challenged by stagflation. Stagflation is a situation where inflation is running high, prices are running high, and at the same time, output growth, in this case the GDP, is contracting. And if you understand how this works, you will find that as Monetary Policy Committee, your core responsibility is to rein in inflation by ensuring that you keep supreme your price and monetary stability mandate. On the other hand, and to do so means that you have to tighten to be able to rein in inflation. On the other hand, government is confronted, or the economy is confronted by a contracting output where growth is negative. And the normal way in economics you would want to really recover from a contracting economy is to stimulate the economy with a lot of easing and injecting liquidity into the system to stimulate consumption and investments, increase government expenditure, right? Increase export earnings, and possibly see what you can do to reduce your imports. That is basically the definition of output growth. Y equals C plus I plus G plus X and minus I. That is what you need to do, right? So you find that in doing this, you are seeing a situation where the objectives or goals are moving in opposite direction. But what did we do? We said, at monetary policy, particularly at the last meeting, we said, we will try as much as possible to be pro-growth so as to continue to see what can be done to accelerate output. But at the same time, we are going to keep our eye on whatever can be done to rein in inflation. And in doing this, what did we say? Monetary policy came up at that meeting, last meeting, and said The penultimate meeting, we said we're going to adopt a systematic synchronization of monetary policy variables, right, that will help to rein in inflation, but at the same time boost output. At the last meeting, we also said we will go ahead to look monetary policy, encourage the management to say that we should adopt some form of administrative measures to mop up liquidity or to control money supply in the system, and in the process rein in inflation by reducing the money supply. That would help to control inflation, while at the same time, because what you will find is when you rein in inflation by mopping liquidity is that it becomes constraining. But at the same time, on the output side, what should we be doing? Let us use our development finance tools to boost output by ensuring that liquidity and funding is made available at concessionary rates to employment generating and output stimulating sectors of the economy. So you are looking at how do you titrate these variables in a way that you are able to rein in inflation, but at the same time you also grow output. So that's what we have done. And that is the reason we're saying it's not a surprise to us, but those who do not understand it will say, oh, how is this happening? I'd heard a couple of people, some say, oh, they expected the output to be negative. I had heard some comments by somebody from LCCI, Lagos Chamber of Commerce, saying, oh, what is happening? That manufacturing has not seen enough impetus to begin to say that that the output growth should be positive. But let me give you some numbers. Like I read at the communique, when the pandemic struck effectively, we said all CBN intervention facilities will now go at 5%. And what we did is also expand that in 2021 into March 2022. We asked the banks to restructure some of the facilities of companies and businesses that may not be able, that have been impacted adversely by the pandemic. We provided stimulus by saying that we're putting in place, at that time, we initially started 100 billion for targeted first credit facility, increased it to 150 billion. At the last meeting, it was increased to 300 billion because we saw the positive effect this was having on consumption expenditure, right? We also went forward to say that for the health sector, we'll make available stimulus of about 100 billion for some of our pharmaceutical industries that have gone moribund to come back alive, or even expand some of the plans of the existing ones. Or our hospitals, to see what can be done to retool our hospitals so they can provide health facilities. These are all stimulus that are meant to stimulate consumption expenditures, and also investments. Don't forget the formula for GDP, consumption and investment. If we inject liquidity in that direction, normally what will happen on the result side is that output will grow. Okay? We understand government constraints, but at the same time, we're doing everything as well to see what can we do to ensure that goods that can be produced in the country are produced so as to constrain imports and make it difficult for people who want to source forex to bring those things. So those are the things that will naturally result in this. So it is science. For us, it is science to expect that what happened or what is happening now is happening or has happened. On the manufacturing and agri sector, where Lagos Chamber of Commerce, Amuda was talking about, we made available 1 trillion naira.